Okay, welcome to Spread Hunter Daily Safari. This is actually going to be three safaris rolled into one. There were failed attempts to record this on the 18th as well as the 22nd, and today is the 26th, so we're finally going to get this done. I wanted to first talk about volatility, which, as all through last week, was really quite exorbitant. We had on Wednesday a range of 47 points in the S&P, which is just under 5 points in the SPY. The range was 216, just under 269, all the way up to just under 275. On that day, also, there was a wild trade in Roku, which reported earnings. The stock traded as high as 52.70. And in after hours, traded under 40 after the earnings were reported. There were any number of spreads. If you have any kind of inkling that this was not going to meet up to its expectations, there were any number of spreads or just straight out long puts that would have been wildly profitable had you bought any of these. Another wild day was Thursday, where the market opened up strong. The S&P was up 30 points or 3 SPY points first thing in the morning. By the middle of the day, it sat there, and then we had a late day fade where it gave up that 30 points plus another 3 points to make a new low for the week. It was a really startling reversal and, was, again, just more volatility coming into the market and staying in the market. So that takes us through last week, but and it did close firm on the week. But today the market opened up and just kept right on going. We had the SPY up, I think it was up $3.20 today, and I'm looking at it up another 50 cents after the close. But it basically came out of the gate strong and just went up all day. One of the highlighted stocks here you can see in the Spread Hunter matrix is IBM, and I highlighted the 6250s, which closed the day Friday at basically at this price here, 4 cents, and today they're made their way up to 15 cents. So one of my favorite things to do is to buy these little junky options, and today's only Monday, so these options have another 4 days to live. When that happens, you usually get a chance to either scratch them or sell them out for a small gain. In this case, they quadrupled, so that's not exactly a small gain. Now they'll pick up deltas and they won't go up quite so fast. And the other one that I wanted to highlight here was a trade that one of our traders made in Alibaba. So today Alibaba was flat on the day, and the trader bought this spread here for I don't see the fill price, but it was purchased for about $1.78. And in order to take some of the risk off the table, so this was done for expiration 3/16, which is a week from this coming Friday. Is that right? No, it's 2 weeks from Friday. And in order to hedge that somewhat, this trader went out and sold a vertical for the following week. So he's long the 200-210 spread for expiration on March 16th, and he sold the 205-212 and a half spread for expiration on March 9th, which means he'll be long Alibaba should it get to 200 all the way up to 205, and then he won't be long it for the points between 205 and 210, and then he'll go be long it again at 210 up to 212 and a half. I don't know if this makes any sense, but it's a very convoluted combination of verticals and calendar spreads, but they're not on the same strikes. The only thing that's noteworthy is that by selling this 205 212 and a half spread, he reduced his risk in the 200 200-210 spread by 50 cents. So instead of 178, he has 128, and you can see the spread. He's trading right here at 190. So far, so good on that spread. And, of course, everything depends on how it's unwound. So we'll take this up either tomorrow or the day after and, get in there and move some of these options around. The volatility is, at a level that traders have daydreams and night dreams about. So good luck out there. Thank you.